SwissBorg is now the official partner of my channel, so you can buy, earn, stake, sell, all in one secure mobile platform. Download using the link in the description, deposit €50 or more and you'll receive up to €100 worth of their native token CHSB. SwissBorg! Hello everybody, welcome back. We're going to talk about the next major big move up for everything. So remember the everything bounce? I'll give you a little clue. The everything bounce, it was more than 2 months ago. It was on the 16th of June I was talking about the everything bounce, and then a few days prior to that we were talking about the buying altcoins, and that was on the 12th of June. So we're talking about 17th for the everything bounce, and alt season begins the 13th. So let's just have a quick look at these for calls. This is Ethereum to BTC, giving you, I told you about it on the 12th. 13th marks the low, and so far everything's been going up. This is just Ethereum, by the way, versus Bitcoin. Most altcoins found their absolute low around then. Nailed it, absolutely nailed it. Same with the everything bounce when it comes to stocks and everything, and the oil top, which was around here. So 17th of June, like I said in the video, all the way down for oil. And what do we find over here? 16th to the 17th found our absolute low on Nasdaq. So as far as the track record is concerned, pretty sweet, nailing the absolute low for altcoins to outperform Bitcoin, nailing the absolute low for stocks to move up. And when are we going to do this sort of thing again? Well, last time it was a little bit more intricate than this time round. This time is actually, from what I can see, it's going to be relatively simple. Previously, I was talking about how commodities are going to move down. The price of commodities affects inflation. Those inflation details will filter through to rate hikes. And then on top of that, the general rotation out of energy into stocks. When energy is at a peak and stocks are at a low, then the money was going to flow from one to the other, just like alt seasons do that sort of thing. So exactly the same sort of concept, just in a traditional market sense. This time what we've noticed is that actually energy has been held down by the price of the dollar, so the strong Dixie basically. Same with everything's been held down by the strong dollar. And I expect the dollar to remain strong for quite a while. I've shown you the short signals generated on pound and euro over a monthly term time frame, which could cause trouble next year. But it's we're talking like monthly time frames, and we're going to look at this on a weekly. This is your Dixie, and I would expect to see a nice rejection around this level here, around 113, 114 or thereabouts. Might be worth sort of looking at individual charts the closer and closer we get to this particular level. Now this has been this chart and this trend line has been in place since more or less this level here, 2004. So it's going back 18 years worth of trend line history here. So tops, well I should say bottoms, breakdowns, tops, supports, tops, supports. So it's an 18-year trend line, basically, an 18-year channel. And I know that the fundamentals for the dollar to go up are, well, they're extremely strong. They're extremely strong. There's only really one thing, well, there's two things that could bring it down. First thing would be a Fed pivot. Don't think that they're particularly interested in doing that. Or for the ECB and Bank of England and other central banks that feed into the Dixie to start to outperform their rate hikes for, to the same speed or more than the Fed. And I don't think that's going to happen either. I think what we'll start to see at some point is the Fed easing off their aggressive stance on inflation as Europe and the UK and others start to step theirs up, and that's going to cause the inevitable breakdown of this chart, maybe down to the bottom of this trend line, maybe even break down from there. We'll see. But for the moment it's still a strong dollar, and we should only expect it to continue to go up. But as we are approaching this major trend line here, this area of 113, 114 area, we have so far got 3 drives of bearish divergence, and that's kind of already been confirmed. We might be working on a 4th drive. Now this 4th drive can take place from a higher zone. It could be considered the 3rd drive. Either way, as we approach this major trend line, we would be looking to approach this major trend line, confirming 3 or maybe possibly 4 drives of bearish divergence, which should help bring it down some. And again, I'm only looking for another everything bounce, and this one again is easier for me to look at timing, because it's a simple one. It's one simple chart really. The movement from energy into equity or whatever, I don't think is going to be as relevant this time. It was way more relevant on the everything bounce. That's one of the things we looked at and we focused on. This time we can see that even energy has been held down by the price of the dollar. And we saw that little rejection or that small move down on the dollar the other day. And everything started to go up. Oil, everything was started to go up. Bitcoin, the lot, they all went up. Everything went up. So it's reasonable to assume that people are cash heavy and they are looking to get some kind of movement into any kind of other asset, especially if the word recession becomes stamped as an official situation that everybody's dealing with. And at the moment, people are sort of beating around the bush and we're not really in recession, or it's recession. Look, what we can definitely say is, historically, when recessions kick in, you're better off having money invested in decent things, things that will yield, stocks, basically, real estate, all this sort of stuff. You're probably better off in that rather than a cash position. Currently, or at least for the last, I'll call it for the last year, really, cash has more or less been king, and not all cash. Let's just face it, a dollar really has been the best bet, and has worked out for those who position themselves around these levels, certainly. But it won't last for much longer. I think that once we approach this trend line, we're going to get the everything bounce. Now, as you all know, I've been sitting this market out for the best part of 3 or 4 weeks now, letting September go through, letting all these things go through. ETH merge, which has been a real non-event today. Also, just waiting for Bitcoin to show signs of a clear bottom. And getting ready to scoop up lots of different types of altcoins, leading into what will hopefully be a new bull market beginning next year and ramping up over the next few years. Earning staking is going to be a major part of these next few years, I think, before some real situation starts to occur. But the next time I'm going to be looking to position myself into any major spot position will be at the top of this trend line. And I'm not looking, like I say, for a major breakdown on this, although that is possible. Remember, this is a weekly chart here. This would take many weeks, well, let's face it, another year, really, to make it all the way back down to this trend line. I'm not looking for that sort of thing to happen straight away. Over the next few years, yeah, we could be looking for a scraping of the top of this trend line and moving back down into the 2025 area. 2024, 2025, that would make sense from a Fed perspective as well. We're thinking about coping and dealing with inflation, getting through this winter period, and seeing inflation dribble off bit by bit by bit by bit. But for the moment, we should only expect a strong dollar and maybe some reaction around here, maybe over the next few months or so. And that's when I'll be looking to call for the next major everything bounce. And that'll be the everything bounce, yeah? The everything bounce. Now, this is just a simple trend line and a simple formation. But these formations do often break to the down, but recognise that we have been in this formation for 18 years, and we shouldn't really be expecting it to break down anytime soon. But a rejection is all we really need. If we think about the tiny little reaction we had the other day and the absolute amazing reaction that all markets got, whether it's oil, Nasdaq, Bitcoin, anything was moving up from there, this would be the next major swing. So like I say, we did the everything bounce, we caught it on the lows, we caught oil on the tops, we got altcoins at the bottoms, we got the crypto market moves for association, but altcoins were the ones to go for. Like I said on my videos, like I say, major swings is probably the thing I'm best at. And this is why I prefer spot trading more than anything. I've been, like I say, for the last 3-4 weeks, just been mostly just sitting around, really. I can't rush a trade. Can't force the market to do what you want. A few little scalpy trades here and there on oil and shorts on euro, but when it comes to crypto, I've more or less been sitting back on the sidelines, waiting for the right opportunity for when this bear market looks like it's likely to end. Which, for the moment, we've not had signs of that. And a new bull market begin. And when it does begin, it might start with a bang, but it's usually going to, if it's anything like the last one, for the first 18 months, more or less up, down, sideways and choppy. Which is why I think trying to time the bottom is a reasonable thing to try and do, and not to get clever and to buy, hold and stake on a variety of different platforms, the ones that I've highlighted like SwissBorg and Crypto.com and Coinbase, Binance, the lot. They all offer decent staking rewards, and you shouldn't really try and get too clever when you're looking effectively as an investment. But right now the market is basically doing more or less nothing. The ETH merge happened today, more or less nothing happened. You know, there's all these sort of things that are just going to make markets move, which is kind of silly. So we should just, I think the best thing to do is kind of sit back and leave it for a little bit longer. And the next time we should expect any significant upside would be when we approach, you know, the 113, 114 area over the next few weeks, maybe a couple of months or so. And again, this might mark the bottom. I'm not looking for it to be the absolute bottom, but what I would be thinking would be a decent reaction across everything, and it would be the next everything bounce. And don't worry, I'll remind you as we get closer to it. I don't expect it to happen today, but nice big fat 18-year trend line of resistance here. With a weekly bearish divergence. Seems like an obvious call, and you could probably put your money in anything from oil, gold, stocks and crypto and make some decent money. Other than that, though, there's really nothing else you can do. So I'm just going to sit back, chill out, and let the charts meet my expectations, and then pull the trigger on pretty much everything that I've mentioned, which sounds like pretty much everything out there. Right, thanks for watching. Hope you have a nice day. Take it easy.